Welcome back. You're watching Big Deal. Now, let me introduce Anuj Ranjan, who heads Brookfield in India. Anuj, thanks so much for joining us on CNBC TV 18. How has been your experience so far as investments in India is concerned? And what is your view currently, especially ahead of elections and a little bit of turmoil that we are seeing at the border?
Sure, our experience in India has been great. We've invested about $7 billion, most of it in the last 5 years, although we've been in India for about 10 years. So the first 5 years we waited, and the last 5 years we really invested. And part of the reason that we are excited about the country and able to do a lot more is fundamentally things on the ground are looking quite good. And I can talk a bit more detail about those, but we think the RBI has done a great job in terms of controlling and bringing down inflation. India now has the highest spread between the bank rate and inflation in the world, double what other emerging markets are. It's giving the RBI a lot of room to further bring down interest rates. At the same time, you have 1 billion people that are now being included in the formal economy through a combination of affordable data and a combination of what I say is the Aadhaar effect, the government's program to get unique identifiers to all of these people and, frankly, distributions of cash into their bank accounts. And so all of that coming together, every business of ours, we're seeing great growth on the ground. So we're very excited.
All right. So real estate, infrastructure, as well as private equity.
Absolutely.
How do you, focus on all three in terms of the priority as well, and in terms of the amount deployed? And how much are you looking to deploy? What is the strategy there?
Sure. So far, a lot of our business has been built on the back of real estate and infrastructure. So of the $7 billion I mentioned, roughly half is real estate, half is infrastructure, office buildings, roads, and energy. Private equity, though, is a very important business to us globally. It is a huge pillar of our business, and we are now very excited about private equity in India. Prior, private equity was more minority growth investing, and today private equity is shifting due to the credit crunch that we're having in the markets, and the NCLT and IBA process sort of forcing sponsors to sell businesses. It is transitioning to a buyout type environment, and that makes us very excited given all this growth that there are potentially great companies, great brands, great promoters to partner with, and that you probably couldn't have partnered with before. So private equity will become an increasingly important part of our business in India. Real estate infra will continue to grow, and infrastructure in particular. I think there is a lot that we can do here, and the government and some of the main companies, they don't need to hold these infrastructure assets at that low cost of capital, and they are looking at actually hiving them off, as we've seen in the market today.
So you have a large portfolio and a large plan here. Let's focus on infrastructure first.
Sure.
It's such a wide sector. Which are the components of infrastructure which you're more bullish on? And in particular, I wanted to know, what is your assessment of the telecom tower business in the country?
Sure. So, telecom towers is a good example. I think data, anything around data, is very exciting to us at the moment. Telecom towers, fiber, data centers, all three from an infrastructure perspective are going to form the backbone of this economy. I think what's happened with telecom towers is it was previously more of a private equity business. There were 12 customers. You had to compete to get customers, smaller telecom tower companies, and the entire industry is consolidated. There really are a handful of telecom tower operators in the country today. Much of it is actually captive.
Yes.
And there's actually only now 3 real mobile network operators in the country today. And so it has transitioned from a private equity business based on growth to being a utility business based on an annuity stream, effectively. These 3 are going to be here forever, and a regular stream of income will be on these telecom towers forever. And so the utility-like nature of these assets now makes them prime for infrastructure versus prime for private equity.
But you don't think that technology, which is growing so fast, could be a constraint?
I think the towers that have been laid, there's 2 things that have given the towers a unique advantage. One is India has got over 400,000 telecom towers that have been put up, thanks to actually Jio as well, in many rural parts of the country, giving every Indian in this country effectively 99.9% coverage and access. That physical infrastructure is always going to be useful. They've also all been fiberized. A good chunk of the towers have been fiberized, and connecting them to fiber, allowing them to get data, especially as you go into 5G and you go onwards, I think that there will always be equipment that is hanging on these telecom towers, at least for the next 20, 30 years.
All right. And which are the other infrastructure pockets that you're bullish on?
We are also spending time, I'd say, on ports, on transportation, on other areas of infrastructure, that could be exciting, that could have opportunities at play. But I'd say energy is the biggest one for us, as evidenced by our interest in pipelines. It's a business we're in and around the rest of the world, and it's a business that we think that we can do a lot more in India, because by its nature, the gas pipelines today are owned either by private sector oil and gas explorers or by the government. And neither are the right pockets of capital for those businesses. Those businesses could invest that capital into their higher growth parts of their industries, and the government could use that capital elsewhere. So we, as an infrastructure investor, are quite excited about the energy sector.
All right, and as far as real estate is concerned, we've seen a lot happen in the NBFC space, which is the prime, capital provider for the real estate space. So do you think that there will be a cascading impact? How are you seeing the real estate outlook?
I think there is an impact happening, for sure. Credit has dried up to real estate developers in particular, but there are other ways for real estate developers to raise capital. And one is bringing in joint venture partners in their developments. One is selling assets entirely. Some of them are income-producing assets like office, like retail, like hospitality. And part of it will just be a different kind of credit market. I do think the euphoria around credit to real estate has gone away. And today the deals that are being done are probably more measured and probably more appropriate.
Right. And do you think that there is more opportunity which is going to come in real estate because of the structural shift we are seeing in NBFC? And would you be keen on an investment or more investments at this point?
Absolutely. We are seeing ourselves in two ways attacking the real estate market. One is we've already bought 28 million square feet of office around the country. We can buy more office, more retail, more hospitality from any of the groups that need to finance themselves and don't need those assets on their books. The other is on residential, where I think that we've already done about $450 million of investments in the residential sector. Not quite as loans, but more as structured finance. And I think that market could grow significantly in the absence of NBFCs.
All right. I like the way you say that we are going to attack the real estate space. As far as the private equity is concerned, now in that practice, what are the areas that you're most interested in and where you'll be spending more time?
So I think, it's early days for us in private equity in India. We have certain businesses we have a lot of expertise in around the world. So that is some low-hanging fruit areas where we think we can bring our operating experience from around the world to India. That could be helpful. But I think investing in businesses in and around where we have a presence in India already. We are a big real estate and infrastructure and power owner and operator. If there are businesses in the services or industrial side that either supply to or service those businesses, that's where we have probably a competitive advantage and a knowledge advantage. And so that's good low-hanging fruit for us, in addition to financial services, which I think is something that we know a lot about, being a large asset manager globally. So areas, we definitely think that for us it's going to be important that we invest in areas where we can add meaningful value, not just with our dollars, but with our knowledge and with our operational capability.
So the strategy will be to be a financial partner, or you're looking at buyouts as well? What is the strategy there? Both.
I'd say with great sponsors, great partners, and great brands, we'd love to partner and be a participating investor with them. I don't like to use the word active because people think it's activist. It's not that. It's participating. Right. We want to be we want to bring value add where we can without necessarily getting in the way. At the same time, if there are opportunities for buyouts, that's one of the few things that we know how to do very well, given we've done that quite a bit already in the country.
So any particular sectors apart from financial services that you mentioned, consumption, healthcare, IT, these are the favorites of most of the financial investors?
I think all three that you named could be of interest to us, but I would say financial services and what I'll classify as infrastructure services are two areas that we're probably spending more time.
And financial services is also a very large space. So which pocket do you think? Is it insurance, housing finance, NBFCs, or banks?
It's all of the above right now. And right now in this market, all of the above are opportunities that are available. So we're spending time across the board. Given the credit situation in the country, I think things around the asset management or credit markets, NBFCs, housing finance space are quite interesting.
And given your experience so far in this particular space in India, how do you see the valuation expectations? And given the market volatility, is that also impacting or derailing talks at this point?
So in some ways, yes. On one hand, valuations look expensive because people look at the Sensex. But the reality is the Sensex is driven by 10 companies that have driven the markets up, the 10 biggest companies in the country. The rest of the companies are actually down. And so valuations outside of the top 10 or 20 companies in the country are not necessarily a challenge. And therefore, we're seeing opportunities. At the same time, of course, with the top 10, 20, we have found inventive ways of partnering, like with Reliance and others, that allow us to still participate in their story.
All right, but when you look at the companies, are there any challenges while investing? Because you've spent some time now in India. Is your initial euphoria while entering India still intact, or has it gone up or down, and basis what?
I think taking a long-term view, we're more excited about India than we've ever been before, just given the speed at which we're seeing the economy come back. In the short term, there are a bunch of things: the credit issue, the NBFC issue, elections around the corner. There's a few things that could always give people pause, but we think India is going to continue to grow, and we're here for the next 100 years. And so my time here, we're just going to try to do the best we can over the next 10, 20.
All right, my final question, your short-term view on how much you're going to deploy in the near term, say for 1 year.
So it's hard to put any number to it. We invest out of global funds, so we could do zero and we could do our whole funds here if we wanted. I mean, we wouldn't, but we could. Realistically, we've raised, we are on track of raising $50 billion across our 3 flagship funds and various strategies globally. A good chunk of that could come to India. We're already $7 billion of assets under management in India today. I don't see any reason why that number doesn't double or triple over even the short term if we find the right opportunities.
All right. Thanks so much, Anuj,
Thank you
for
very
your
much.
time.